And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon to be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. And if you think somebody may find this of interest, why don't you go ahead and hit the share button as well. So headlines are all over the place. Iran is predicting a global war, World War III, as the U.S. and Israel continue to pound the Iranian missile and nuclear programs. And, oil prices are surging. The Straits of Hormuz or the Straits of Trump, whoever you go by, are sort of closed. Oil isn't getting where it needs to be. Those who are not so sufficient in terms of oil, i.e., the Asians, i.e., the Europeans, are facing unbelievable record level prices for crude oil, for gasoline. The question is, doomsday is upon us. There are even those who are sort of messianic who actually believe that this is like Armageddon is actually happening right now, as some of the prophecies about the major religions of the world all coming to a head in the Middle East could be, interpreted as actually what's going on now. But I'm going to leave that for people who are far more spiritual, messianic, and know a lot more than I know. I just want to speak about money, the mundane. So the question is, right, if we are heading to something bigger, how does that affect your investment? Should you panic and sell? Well, you know me, right? The first thing you should never do is panic. Panic is bad. Okay, nothing ever good comes out of one who panics. You have to make an intelligent decision. The first thing you have to do, right, is again understand what your goals are and what your needs are, and you should have an asset allocation model, which will allow you to achieve whatever it is you're setting out to accomplish vis-a-vis your goals and needs, right? So if you don't have lots of money and you don't have a lot of spare money and you're retired, you may, whether you should have exposure to the stock market or not is a question that you need to think long and hard about. But I'm going to speak here about people who have money that's invested in the stock market, right? They can afford, obviously, you have to be able to afford to lose, right? You can never invest in stocks if you don't have the ability to lose money, okay? Because markets go down. Tell that to people all the time. Markets go down, they go up, and they go down. Over time, historically, they go up. But that doesn't mean from today to tomorrow they're going to go up. They could go down, and they can go down violently. And you just have to remember that. You have to trust the process. But what I want to focus on right now is looking at some data that I saw that was provided by Standard & Poor's a couple of weeks ago. And it's the S&P 500's returns after major geopolitical events. Going back to the Korean War. What happened after the Korean War? The 1 year after, right? This is 1 year forward returns after major geopolitical events. After the Korean War, the S&P 500 was up 11.2%. After the Cuban Missile Crisis, the S&P 500 a year later was almost 28% higher. After the Six-Day War here in Israel, S&P 500 up 13%. After the Gulf War, S&P 500 up 10.2%. After 9/11, a year later, the S&P 500 down nearly 17%. After the Iraq invasion, S&P 500 up almost 27%. After Brexit, S&P 500 up 20%. After COVID, a year after COVID, not 6 weeks after COVID when the market was down 35%, but a year after COVID, market up almost 44%. After the Russians invaded Ukraine, market down 7%. On average, after all those geopolitical events, which we're talking about, nearly 70 years, the average annual return of the S&P 500 a year after those events was up 14%. To me, that's food for thought. What's that mean exactly? Well, it means that if you have money to either invest now or you're currently in the market, you shouldn't panic. Because ultimately, like we say, things are going to probably work out, right? And I can't tell you what's going to happen. We had a year later, which came back to average, 10, 11%. There were a few of those. We had some fantastic years. But on average, the market returned a year after these geopolitical things, risks, conflicts, whatever you want to call them. The market was up over 14%, which means that markets tend to shake these things off. It may take a little bit later, a little sooner, a little later, But that's what generally happens. Now, we're in a drawdown right now. The market's down from its high, basically 10%. NASDAQ's down more than 10%. That doesn't mean the market's not going to drop more. I have no idea. Maybe we'll drop 30% more. I don't know. Beats me. But I do know, especially for people sitting on cash, historically, now's a good time to invest, right? You're already getting what I would refer to as a 10% discount. Not bad, especially if you consider that over time the market goes up, right? That's good. You can just sort of bank that money. So it's something to think about. If you've got free money sitting around, maybe now is a pretty good time to invest it. Again, that's money that you can save for the long term. If you've got money that you need to make a down payment on a house in 6 months, don't invest in stocks. You cannot imagine how many calls I get from people where they say, yeah, we've got money available, and we're thinking in the next 9 to 12 months of buying an apartment or a house. Should we invest the money? And I'm like, no, we should leave that money in the bank. Throw it into a deposit, make something on it, because why not? But why would you want to take any iota of risk? Well, people say the S&P 500 is safe. Well, it's safe until it's not safe, right? It was safe until 6 weeks ago, and now it's dropped 10%. That would sort of stink, right? If that's money that you're counting on for a down payment, and all of a sudden 10, 15, 20% of it gets wiped out and you've got to make your payment. Right? That's going to make a big dent into your life. It actually may screw up your plans. It may send you scrambling in order to complete the purchase that you've already agreed to. So why on earth would you do something like that? Again, only invest in stocks if you can afford to lose the money. But if you can't afford to lose the money, you have no business investing in the stock market, because what's going on now can happen. It happens all the time. I think I saw in the last 98 years, there have been at least 55, 56, 10% drops. That's more than one every other year. 15% drops, there's been like 30, right? So one every 3 years you get a drop like that. 20% drops, bear markets have happened, 10% of the years. So this is something that happens all the time. Don't be surprised, because what ends up happening, markets go up, they go up for a couple of years, they go up strongly, and we think we're infallible. We're amazing investors, right? Oh, we can beat the system. But ultimately, people forget, and when things start dropping, they get all nervous and they get all panicky. No, this is what regularly happens. We need that wake-up call, maybe, that slap in the face to wake us up, to realize this is what happened. This is what's normal. Above average, outsized returns are not normal. They might be normal for a short term, for a short period of time, but ultimately things revert back to the normal, to the average, right? So if the market averages around 11% a year, after 5-10 years, that's sort of going to probably end up being that return, because we're talking about over 100 years of data. So don't think because you got a 25% year, a 17% year, you started off with a 6% year, that we're going to have another 40% year. Sometimes it happens, sometimes it doesn't, but there are those drawdowns. There are times when the market drops, and you have to realize that's going to happen. You have to be prepared for that when you start. You have to be prepared for that, right? That's when we do asset allocation. So that if you're not 20 years old and investing for the next 40 years, and you can ride the roller coaster, but if you're in 50s and you're in 60s, and if you're retired, you might not be able to have all of your money invested in the stock market. You might need some fixed income just to balance things out a little bit, take a little risk off the table, so that when the market does drop, and it will, and it is now, and it will in the future, it's not going to, cause you tremendous amounts of stress wondering, oh my God, I'm going to get wiped out. Because if you're set up correctly, that's not going to happen. Yeah, you might lose some money, but you plan for that. You've taken that into account. Okay, so tune out all the noise about Armageddon and the market and World War III and everything like that. You know what? I don't know if it's going to be this year. I don't know if it's going to be a year from now, 2 years from now, 3 years from now. But things are going to work out, probably, because they have in the past. I'm not guaranteeing that. God forbid. But if we want to learn from history, and history tells us that's generally been what happens. Okay, so don't panic. Make sure your finances are set up correctly when you start. If they're not set up correctly now is a heck of a time to get your asset allocation in line with what your goals and your needs are, so that if markets continue to drop, you're not losing sleep over it in a panic. Oh my gosh, I'm not going to eat tomorrow. We don't want that to happen. Okay, you've been tuning into the Aaron Katzman Show. We speak to your life, money, and your investments. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. If you think somebody might find this of interest, why don't you go ahead and share it with them as well. Thanks so much for tuning in, and we'll speak to you soon.